Sunday Wild is our musical talent today here on Liquid Lunch, and we've got Joe the Investor here. Joe, great to have you here on the show as always.
Yeah, thanks. How are you?
Well, surviving.
Surviving.
We're looking forward. We're going to talk to Dave Kane later about the Ormus Gold, so it's going to be awesome. But we're talking about the banking sector today. Is that right? So where do you want to start?
Well, the underlying question of what I'm going to say is, where did banks come from, and why do we have them, and what are they intended to do, or what were they intended to do originally?
Mm-hmm.
So from the history, there was no banks at one time. What people used to do, the rich people that had the money, which was in the form of gold, brought it to a goldsmith for safekeeping, because he had the vault, and he was the only one that had a vault. And so these rich people were the depositors of today, and the people borrowing the money went to that goldsmith to borrow money or gold for their activity, and they were the people withdrawing, or the borrowers. And so the rich were the lenders, the poor were the borrowers, and the goldsmith was the unofficial bank.
Mm-hmm.
And he kept all the money in the vault, and he kept track of it with receipts. And so the receipts today are deposit slips and withdrawal slips that a bank issues. And from that was thousands of years ago, but over time that turned into today's bank. And if you see the word savings and loans, as in the US, that actually describes what a bank does.
Right. Yeah, people can save their money there, and they lend money.
And they borrow money.
Yeah. Okay. Now, I know. Sorry, go ahead.
So that's the history. So what is a bank supposed to do? They're the middleman between the lender and the borrower, because you could borrow money without a bank if you wanted. If you know somebody that has money and you go directly to them and say, I need $100,000, and if they're willing to lend it to you, you make a deal with them and you pay them directly. And they still have this today. They call it private lending.
Mm-hmm.
But most people don't know these people that have the money, so they just go to a bank because it's easier, and they're trusted because everybody else has their money there. And so that's the basic function of the bank, to bring these parties together to borrow or lend. And from there it expanded into what we have now, which is the banks do many different things.
They sure do. I know the story too of the bank, of the origin of the banks as you've described it. Is that really? And it makes sense from a mythological point of view. As a myth, it makes sense, and I don't mean myth in the sense of a made-up story. I mean myth in the sense of an archetypal story that makes a point, right? But is there any evidence to suggest that in historical terms this really happened this way?
Well, I've got some sources that have said that same story, so
okay.
From what I know, it's
all right.
It's as credible as it comes.
All right. Well, even if it is just a myth, it makes a lot of sense. So let's go with that. So now we have the banks in what they're doing today, which is functioning as that bridge between borrower and lender, but they're doing other stuff as well, right?
Yes, and the bridge is still their main business, i.e. mortgages and deposits, and then after that they got into investment and insurance, and they buy their own businesses and do their own deals. But that was only about 30 years ago in Canada when
they weren't
the government
even
allowed them to do it.
Yeah, they weren't even allowed to lend mortgages. I think until the early or mid 60s, banks weren't allowed to give mortgages even. Which, yeah. We've seen a lot of inflation in the housing sector since they've been allowed to flood the market with a lot of money chasing housing stock. But that's another story. Okay.
So, and why I bring this up is because people think because something is there, it's always been there, and it's always been there in that form. So when you see a bank today, people say, well, it's been like that since whenever. But actually, it's fairly recent that the banks do what they do today and are as big as they are and have as much influence as they have. So it just makes you think, if it wasn't always like that, how else did things get done? And a whole bunch of thoughts come up when you explore that.
So what have you come up with
For these thoughts? Well,
yeah.
Well, the direct lending was one of them. People can deal with each other rather than through this intermediary.
True, but it makes more sense if, like a currency, people can trade directly with one another, but a currency as an intermediary step makes a lot of sense. That's why we have it. Similarly, even the banks, to fulfill this function of being the middleman between borrowers and lenders makes sense, right? That part of banking makes sense.
So, Joe,
I would say that, yeah.
Yeah, Joe,
Yeah.
I'd be interested to know your ideas on how we can bank differently, like in the future, like how the history of banking can be related to future banking. What do you think will happen in the future, or what is possible in the future in terms of alternative currencies and
an
things
example of, so if you know what a bank's supposed to do, they're this middleman. You basically have to find a way to find. So if you're a borrower, you need a way to find lenders. So if you don't want to use a bank, you can use a trust company, a credit union. There was an idea of using the internet, where if you have enough people get on a site that says, I need money, where can I go? And there's enough volume, the way they've done with everything else. The travel sites or the buying goods sites. If enough people go on it, it becomes its own entity. That's just one idea I've heard of, but these co-op ideas where people get together and pool money, rather than borrowing it, they share what they have and build. And so things like that will come out of it.
Yes.
Co-op. It's because a credit union is a co-op.
Mm-hmm.
Right?
That's right.
It's formally a co-op, but it's interesting. I've actually been on the board of credit unions, and it's interesting to see what really goes on. It's also interesting to think. The other thing, over the weekend, I happened to catch that documentary, Dream Tower, about Rochdale. Remember Rochdale, the big student co-op building in Toronto? It's a legendary thing that happened in Toronto, and it's named after Rochdale. The principles of the co-op movement were started in Rochdale, England. So the Rochdale College in Toronto was hearkening to that original co-op concept, but Rochdale went horribly wrong, and I think that co-ops can go horribly wrong too, and to fight that going horribly wrong, and they've gone in another direction that's also a little bit wrong, where they because what a credit union is supposed to be is a co-op of all its depositors and members, its members who are depositors and borrowers. But in reality, what's happened is that professional financial administrators, often from the banking sector, are now running credit unions. And in a sense, credit unions are in the same business that bankers are. They just have a different ownership structure. And so you can argue the pros and cons of that, right? Because on the one hand, you've got professional bankers running credit unions. On the other hand, I think to a certain extent, especially as credit unions start to merge with one another more and more, they feel the need to do that to stay competitive. There's less and less in touch with what the members who own it really want.
Yeah. I can see that happening. That can happen anywhere, I think.
Yeah, so it is a bit of a tension between the democratic values of any kind of organization and then the need to get the job done. On the other hand, by professionals who know how to run it in the industry. Although this is a big long conversation. I think we've become too dependent on professionals, and you know
Yeah,
that's a whole big conversation.
well, I think there's a space. It's possible to have. People have already started. Some companies have microloans, right? There's microloan programs, and that's like a different sector, right? So I see banks as one, possibility, one option, and credit union as another. And for small loans, like they do that in Africa, there's charitable organizations provide microloans, like very small amounts. It could be $100, $200 or something like that. In places like Africa, it makes a big difference.
Well, it's a movement that has not been unnoticed by the credit union sector, and even in Toronto, at least when I was involved, they were doing microloans. They had an active program all about micro lending to micro enterprise. But Joe, what else do you want to say about this? Because you've been exploring this whole topic of the banking sector. What else have you learned, or what else do you want to share with people today?
I'd say, well, there's another question is the focus is on loans, but maybe the question to ask is how many loans do we need, and how else can we get money other than borrowing it? And the obvious things that come up are charities come up. The co-op, I guess, is another idea. When people start a company, they make partnerships. So I guess the underlying question is there's a lot of lending going on, and there's a lot of cost to it, and there may be other ways of getting money, which historically they've done with equity or pooling money together.
Like who?
Well, mostly entrepreneurs would do that. They'd get the people they knew and they'd put in what they had, and then over time they'd build whatever they were building. And then as they made money, they increased. They say in economics that savings is investment. So the savings is what drives everything. So if you can take the savings and refunnel it into something else other than lending, the whole system can be changed.
Where would you take that money? Well, just to kind of illustrate that point, I mean, as we've seen low interest rates over the last 20 years, we've seen savings rates go down, and the money that has gone to grow the economy has come from lending. Because the interest rates are low to borrow. It's cheap to borrow money, so people have been borrowing money rather than saving money as a general tendency over the last 20 years.
So imagine the reverse of that now. If the rates go very high, the savings rate goes very high, the lending will be a lot less. Money will come from existing money. Now, the counter argument is you're not going to have the growth, because I think that's what's underlying having the rates low, having all the lending. Things grow faster, but then you get into sustainability, where how long can you do this before it can't grow that fast? It needs to consolidate, and if it does, it could be a long consolidation if you've had 30 straight years of big growth. In the past, they didn't have growth like that. It was very stable and constant because the lending was very low. Because it came from existing money, it could be done forever pretty well. But what we have now can't be. It's eventually going to have to retract because, well, there just isn't enough stuff to fuel this growth. And
well, I think part of the problem is that that really when any kind of a loan is made, whether it's for low interest rate or high interest rate, the money has to come back. Let's look at a mortgage, for example. Even at a low interest rate of 5%, or 3, 4, 5%, you say you borrow $300,000. right? By the end of your 20 or 30 year amortization period, you will have paid back the bank, I don't know what, 20
two to three times
$2
more.
million or something like that, even more than, like, quite, a lot of money, more than the $300,000 that you borrowed. The question is, where's that other money come from?
From the future.
From the future. Exactly. And to me, that's what fuels inflation, right? And we had inflation because I think we sort of started at ground zero, because of course, Germany started from scratch, fresh after the Weimar Republic when they had their super heavy hyperinflation, right? They started from a new zero, right? They had to sort of reset, right? I think similarly, we pretty much reset after the Depression or after the war.
Not exactly. It looked like a reset, but I think it was actually the debt was still there. It just changed form.
Yeah.
But it wasn't completely reset.
But it's so long ago now that for all practical purposes, I think what happened was from that moment, from the war, the Depression and the war, then we had a economic prosperity when everybody came back and everybody was feeling good, and we had all this new capacity in the economy that was built up during the war to fuel the war machine. Now it was turned to peaceful purposes, washing machines, cars, everything else, right? But then we saw inflation creep up into the 70s because that every time those loans are made, when that money gets created, we have to take money from the future to pay that loan off, and that's going to cause inflation. Then Reagan came in, and they said, we're going to clamp down on monetary policy with high interest rates. They did defeat inflation, but
they postponed it.
They postponed it, and now, because at some point, there's just not going to be enough money that you can get from the future to pay off in the present. And I think that's sort of the brick wall we're running into.
That's the ultimate scenario, yeah.
And that's why governments can't borrow anymore, even, because if they're going to borrow more, then we have to pay more taxes. People can't afford to pay more taxes because they're already paying so much interest to the banks, right?
And that's one way it can show up as being unsustainable anymore. So yeah, this all ties into that when debt gets too much, this is what happens. It eventually has to reset. It has to stop because you just can't pay anymore.
Yeah.
And taxes is the way the government hits the wall. For the consumer, it's bankruptcy. For the company, it's bankruptcy. For the system, it's a currency devaluation or a hyperinflation, which is what Germany went through, Zimbabwe went through. These are all the same things, just different levels.
Yeah.
But it's going into excess and then not being able to pay. Mm-hmm. Like the guy playing poker who bets too much, doesn't have the money. When he's asked to pay, he has to leave because he can't pay.
Yeah.
So the game is now over.
Right.
And if you take that across the casino shuts down. It's the same type of thinking. And so how do you bring it back? You tone the lending down, and if you do that, as you keep producing things, you'll catch up to the money you borrowed. So what they said in the past, if you had a lot of debt, you just had to save more and keep paying it, and eventually you would get out.
But as you have to take the money from the future to pay in the present, that's going to fuel the inflation. And that's going to bump up interest rates, and that's going to increase the rate at which the debt increases. The system, to me, is unsustainable.
Yeah, I would agree with that, yeah.
Okay.
So that's where the law of attraction comes in.
The law of attraction?
Well, there's abundance in the universe. We can all have access to as much money or currency or whatever it is we need.
Yeah, but you're going to need a wheelbarrow to take it to the store.
Well, yes. And what happens when there's hyperinflation and people start trading other things?
They got a groovy new wheelbarrow over at Canadian Tire I saw advertised. We should probably stock up on those, Joe, do you think, to deal with the coming hyperinflation crisis?
That's the one with the it turns into a dolly and you
Yes.
can carry stuff with it.
You see Canadian
Yeah.
Tire
There
always
you go.
thinking of what we're going to need.
No, they're the ones who came up with the kit. When there was the blackout.
What kit?
Oh, they have a kit that you have, let's
Oh,
see,
yeah.
a generator
Of
and
course.
a flashlight.
Plus,
and
they've invented their own money already,
That's right.
right? So they're
See,
way
they're-
ahead of the game.
They had
So-
money before the government did. That's
Yeah.
Yeah.
Canadian Tire money goes back to.
Okay. No, Joe, we don't have a lot of time left. Do you want to? Can you summarize what you're saying here? What you want people to take away from this conversation?
My summary is that the essence of banks, why we have them, is to be a middleman between the borrower and the lender. That's why they exist. That's their main business. And so all the other things they do are just added to that. And so when you think of that, it will change how you see the banks. Because people see them as this big, basically they have everything and have all the money and control everything, but it doesn't have to be that way. They're really administrators. That's what they're supposed to do.
Mm-hmm.
Bringing people together to exchange. That's their function. So
Yeah.
it's a different take than what you see today.
Well, I think they've emerged from being a very conservative type of institution. Like traditionally, I think banks are very conservative, small c.
They have, yeah.
But when we saw with the meltdown in the markets that happened in 2008, especially with the American and British banks, even
They're
it didn't
not-
happen in Canada
they're
because
not
we're
that
too
conservative.
conservative. But when they were starting to we can make money on derivatives and stock swaps and these
Types of bets. Yeah.
basically bets. Yeah, basically instead of solid investments, putting money into solid things, they could make their bottom line this year could show huge revenue by doing these essential bets, that destabilizing bets that can destabilize real industries, right? If they go wrong, but banks making money on it, but it's not real money. It's fake, and in the end, it crashed, it collapsed. It was unsustainable because those I forget what they're called. What the U.S. was selling as
Subprime?
subprime, collaterally backed bundled mortgage products that eventually collapsed because they have a conflict of interest. It's in their interest to lend money at interest, even if it's a bad borrower that's not going to be able to pay. But it looks good on the bank's books until the day when it defaults, and then the banks lose out big time. That's exactly what happened. Fortunately, Canadian banks weren't so. They were still
Fairly
more
conservative.
small c conservative than a lot of the other ones, and so far so good still here in Canada. But you got to do something because if the system is unsustainable, but it's such a big system, how do you change it?
Well, it starts with people being aware and asking the questions and saying, okay, if it wasn't like this, what else is there? And eventually people think of things. The creativity gets started if they start to look for it. So that's kind of what I'm saying this for, to get it started, to get people talking about, okay,
Great.
what else can we do?
Yeah. Okay, great, Joe. Great to have this conversation. If people want to get in touch and carry on this conversation with you, how do they do that? What's the best way for people to get in touch?
So my email is joetheinvestor.today@gmail.com, and my website is www.joetheinvestor.ca.
Okay. All right, Joe. Thanks a lot, as always, for coming in here on Liquid Lunch.
Yeah, thanks for having me.
Anytime. Okay, we're going to take a quick break, and we're going to come back with Dave Kane right after this, and we're going to talk about Ormus Gold. We'll be right back.